Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome to Market Talk here on this Tuesday, June 7th. Great to have you with us. Thanks for making us part of your day once again. I'm your host, Jesse Allen. Follow us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. Find all of our radio affiliates there, streaming sources, and much more. Well, we saw some strength in soybeans and corn today, pressure in the wheat markets, mixed to higher action in livestock. Lots to discuss here on this Tuesday. Let's say good afternoon to our good friend Brian Splitt with agmarket.net. Brian, good afternoon to you on a Tuesday. How are you, sir?
Hey, Jesse, I am good. I am glad the session is over, and it is great to be here.
Well, I am with you. I'm glad the session is over. Bit of a weird what it felt like today, Brian. Just overall, looking at things, we found some strength mid-morning in corn and soybeans, but not a whole lot of news out there to really point to why we found that strength today.
Yeah, corn was the first to really trade higher and kind of hold those gains this morning. Shrugged off those crop conditions yesterday afternoon, and beans were hanging around unchanged for the first hour plus of the session. And then it was like something lit a fire under their butts, and we were up 25 to 30 cents on the day within about 15, 20 minutes. And a little talk that China purchased about 3 cargoes of old crop soybeans out of the PNW for August delivery. So that seemed to be at least part of the explanation on the old crop soybeans. We also do have a report on Friday, and with the continued good export demand, I think the general thought is that old crop soybean balance sheets will tighten up a little further here as we get that much closer to the quarterly stock and planted acreage report that we have at the end of June. Weird day in corn, though. There was part of the chatter today was that they were buying corn on the talk about some of these models looking for some hot and dry. But I tell you what, if that is the case, they sure traded it strange, because we had late in the day, the spread between D's 22 and D's 23 corn was down about a dime. And so that's just not how you would expect the market to be trading if they were trading this based on a hot and dry forecast. We should see D's 22 leading D's 23 higher, not the inverse of that. So that was very strange.
Well, you mentioned some of those spreads, and staying with this corn market, just to continue further on that, one has to wonder, I mean, is it a sign of some commercial demand, as you alluded to? I mean, that did seem very odd today. And also, looking back at yesterday's crop progress numbers, wondering how many acres are still unplanted in parts of the northern plains and what is going to be planted or prevent plant or switch to a different crop. It feels like this corn market right now has got a lot of interesting, maybe conflicting fundamentals underneath it, Brian.
Right. You had mentioned the idea of maybe some commercial activity today, and that makes sense. That would be potentially expressed in the spread between July and September, or July and December, and that July Sep spread was up 3 to 5 cents for a lot of the day today, and looks like it may have made a little bit of a low. So that's a spread that if you're seeing some strong basis out in the country. As we get closer to the expiration and first notice day of July, we should see July trade strong versus September contract, especially if we're seeing some good commercial demand. So that makes sense. But yeah, as far as the acreage situation, I think there's thoughts that we may have picked up some corn acres in some of the I states, relinquished some acres up north where we just haven't had the good planting weather. And so, now the question is it prevent plant, in which case they will most likely file prevent plant for corn because it pays better. But I've also had producers tell me that they will just force beans in, and they'll keep doing that till maybe about June 20th, even though it's past their insurance date. And maybe that's why this bean market in new crop is maintaining these good premiums up here in this 1525 to 1550 zone, is just to really incentivize that last bit of soybean acres getting planted up north.
Well, and November beans today, just finishing here right around that 1550 mark, as you mentioned, just looking at that close 1549 and three quarters. So almost essentially 1550 today. Brian, on the soybean side, you mentioned the tightening of balance sheets potential out there coming up on Friday's report. And obviously, as you just alluded to, with growers maybe putting more beans in the ground here as we get into the month of June, realistically, what is the upside potential in this soybean market if we look at some of those new crop 22 and 23 contracts right now?
Well, I mean, that's going to come down to what weather does in the next 30 to 60 days, Jesse. The market could go substantially higher if there's a reason to, based on weather. We all know that. How high? I mean, I could tell you, for when I get that question, how high could corn go or how high could beans go? I just look at a chart and I look at the highs we had in '08, which was kind of that first major inflationary cycle. And then that came crashing down. And then we had highs in 2012 on the drought. So if you just kind of draw a line from one peak to the next peak, on the corn chart, that would come in just north of $10. And on beans, it would come in, I think, around 21 or so. So whenever I get asked that question, that's my answer. Just that, to me, would be kind of that overhead channel line on the chart. But I think you got to have some kind of a major weather catastrophe to see those prices. Without that, I don't really see a reason to go there. So as far as in the short term here, we've got resistance we've made some key reversals in beans a couple weeks ago or a week and a half ago. We're still kind of trading inside of that day's bar on the July beans. We haven't taken out that day's high or low since. And so this market's really just consolidating, it's coiling, and it's going to make a move. I don't doubt that. Which direction, only time will tell.
Well, we talk a lot about on this show about just protecting your position as well. I think, Brian, I think that's something that we need to remember. Our growers need to think about. They're busy, they might still be planting, but trying to keep an eye on their marketing. And just with the volatility that still remains in these markets, it's always important to make sure you have that plan and try to take as much risk off the table as possible.
Yeah, right now we're in that time of year where one day you could go home feeling very bullish, and then the next day you could go home feeling very bearish. We're seeing larger moves just because of the price that we're at. So, we're going to see a larger day-to-day moves at $7 corn than we would at $4 corn. And so I think the move that we had late May into early June as we started the month, I think that really showcases the utility of maintaining puts under the market under unsold bushels. We very quickly took 50 cents off of new crop corn in a couple of days, whether it was partly because of the fact that we got some good planting done, a benign weather forecast for a couple of weeks at that point, the idea of a humanitarian corridor to get some grain out of the Black Sea region. These were all things that kind of came together all at once, and there you go, 50 cents in corn just like that. So I get the idea that we're in an inflationary environment. We've got all those summer weather in front of us. We don't know whether that's going to facilitate a hot and dry period during pollination or not. But I think, if you're trying to be bullish with the crop and say, hey, we're still in an uptrend and things are okay, it still makes sense to keep puts under it just in case, because when the market's done going up, it's done. And I don't know when that is, and neither do you, and neither does anybody listening to this, but that's the whole point of managing risk.
Exactly. And if we didn't know, we'd be probably millionaires and probably be on a beach somewhere for sure. Brian, let's switch gears. Let's talk wheat. Today, winter wheat under pressure, and spring wheat held its own at the close. It was down a little bit here as I just look at some of the final settlements, but winter wheat really kind of just reversed some of what we saw yesterday with strength on Monday. What are your thoughts with this winter wheat market? Chicago, KC, what did we see there on Tuesday?
Well, yeah. So coming out of the weekend, it was all about that terminal in Ukraine that was damaged. I think the market probably bit off more than it should have, because from what I understand, the majority of the damage was actually warehousing sunflower meal. And so, the idea that we needed to take wheat up as much as we did, I think that's more of a sentiment type of thing. Like, we talked last week all about this humanitarian corridor, and now we've got a facility that's been attacked. And so it just really made that idea that we're going to get grain out of the country that less feasible. But now here today, we're right back to the talks of Turkey helping facilitate things. And so this is going to be a very, very headline-driven market. I would suggest anybody that's trading wheat to really keep your price points, at some of the extreme ends of the trading range, because all it's going to take is a day or two to go from one extreme to the other, and try not to get caught up in the noise in the middle, I guess is the best way to put it. I do think when you start talking about this humanitarian corridor, it's going to take more time. I mean, you have to get boats that need to get insurance. You got to get captains that want to get their boat in that area. You have to get all these mines out of the ocean by the port, which doesn't happen overnight. That's probably a 6-month endeavor to make sure it's cleaned up. Then when you get civilian vessels to be moving in mass in that area, and there's still a war zone going on, it really, raises the potential for some kind of a mishap. So I think this market's going to continue to be extremely volatile, headline to headline, and we're going to keep seeing these big moves. Big picture, we've got some double tops. You got a double top on July Chicago wheat on a daily scale. You've got a double top on the July, or really not even July, but just on the hard red wheat on a monthly and yearly scale, back from some highs back from, I think it was 08. So until we take those highs out, that's some very, very major resistance on the winter wheat contracts.
In spring wheat, it feels like some of the same fundamentals are there, but also a few differing ones as well, just with some of the acreage and planting issues we see in the northern plains and the Canadian prairies. Brian, do you see anything different in spring wheat that we need to keep an eye on, or anything different on those charts here as we work into the month of June?
Well, that's, I think, the main difference, and you had nailed that the winter wheat's planted. So it's in the ground. We're not going to get any more or any less of it as far as plantings are concerned. That is not the case for spring wheat. That is still a situation that's evolving. It's fluid. And so I think when we typically have seen some of the strong buying because of the talk about Ukraine, you typically see a little bit stronger moves in the winter wheat. That's generally where the funds are going to want to be. So they'll go to the Chicago contract. But when you have these down days where it's more of a risk off and, hey, things are looking better, you seem to see less selling in the spring wheat, because it does have kind of that underlying issue right now of getting the crop planted, which the winter wheat does not. I think that's something where wheat will move in big picture. All three varieties will probably move in tandem. And when the market's done making highs, all three of them will go down, but at different paces.
Brian, let's flip over to livestock today. Cattle and hogs fairly mixed to higher on Tuesday's session. As we get past Memorial Day, get into this summer grilling season, look at all the various factors in the market. Cattle trade. I'm curious your thoughts on what we're seeing in fats and feeders here, with some, a little bit of mixed price action we've seen the last couple of sessions, but still seeing fats, 133 on the June contract, out to 140s, and then feeder cattle up in the 170s. What's your thoughts with this cattle market right now?
Well, I will start by telling you that the August feeders, that's where the volume and open interest lies right now, failed at the downtrend yesterday. So very simple downtrend from the contract highs. We've made numerous peaks along the way. So that's a very clean downtrend with several points. We kind of jabbed through it yesterday, closed well off of it, went up and took a look at it again this morning, failed again. So I think that market, it's at resistance. It's had a nice recovery off of lows. It's going to be difficult for feeders to want to go up substantially from here and take out this downtrend if this corn market does see some continued strength or continued concerns about weather. But at the same time, you look at today, we had corn sharply higher. And feeders were able to withstand that pretty well. And they were also bull spreading it. So they were kind of buying the front end and selling the back end of feeders, which added another dynamic of some kind of underlying strength there. So I really look at the highs from yesterday, and this is both for feeder cattle and live cattle, some very important highs. And if we can get through those highs, I think you're going to see another wave of technical buying. And I still have some higher objectives on some of these live cattle contracts, especially your December and February, I think those have some more upside yet before we come into some good resistance there.
Hog market, it's been holding fairly steady here lately, kind of in this front months, this 105 to 110 range. I know June getting ready to wrap up here. It feels like that's maybe kept a bit of a lid on the hog market. Would you agree with that, or what are you seeing in lean hogs right now?
Yeah, kind of same deal there. And you look at the chart on June hogs and July hogs, and we've kind of come up again against their own respective downtrends, and we've just been really consolidating in that area. Market had that head and shoulder top in hogs. We priced that in, then we gapped out of that, and we thought we'd come back into the low teens. Where we go from here, honestly, I'm not quite sure. I haven't been paying as much of attention to hogs recently. I kind of made that move in the head and shoulder top that we wanted, and then it bottomed like we thought it should. I really don't have anything good to say about hogs right now, so I'm not going to say anything.
Well, fair enough. How about the outside markets, energies, and we see the stock market fairly quiet today. Crude oil has been hovering around that $120 a barrel mark. Any thoughts going on in the outside markets that we need to keep an eye on?
Yeah, the energy market to me continues to be a big concern. I think if something's going to really wreck things, it's going to be energies right now. And I keep reading things about, how expensive it is to keep trucks running. The trucking industry is really facing some major headwinds with the price of diesel. And I don't think a lot of people understand that if that is the case and that continues, and the trucking industry really suffers, that's going to put things in a bit of a hurt locker. So then you look at natural gas prices right now. I mean, we've gotten well above $9. And, with a late crop this year, does that put us in a scenario where we might have a little bit of a wetter harvest? We'll see. But drying costs are going to be a major concern this fall. So, and I think if something's going to really change the dynamic of the economy right now, for what the average person can afford, it's food cost and energy cost. And I, for the life of me, can't understand why when the government's, measuring inflation, they take those two things out. That is your bread and butter of what really drives inflation for the average person. So, you look at gas here in the northwest suburb of Chicago, approaching $6 a gallon. Oofta. I mean, that hurts. That hurts to have to pay that much to go to work.
Very, very true. Brian, before we run out of time, any other final thoughts you have for us on this Tuesday?
Yeah, this is the period of time where we're going into that volatile weather market. So I think this is where you just got to have some kind of a plan in front of you. Are you going to make some sales, throw on a call to replace that sale in case weather gets nutty? If that's the case, I like the August short-dated option to get you out until late July. I think by then we're going to have a pretty good idea of whether we had an actual weather story come to fruition or not. If you get to a point where you don't want to sell more cash, then puts are, like we said, they've shown their utility in the last couple of weeks here, with just the move that we've seen to the downside in corn. So if you want to have a floor at $7, that's something you can do. And we've been actually at agmarket.net been looking at a way to hedge your revenue guarantee for your 2023 crop using some options. So if anybody wants us to explain what we're doing there, get in touch with us and we'll help you understand what we're looking at.
And I know folks can do that very easily at agmarket.net, can't they, Brian?
Agmarket.net, call us at 844-4AGMARKET, so 844-424-6758. And you can reach me directly at 815-665-0463.
Well, we appreciate the time and analysis as always, sir, and we will wish you a great rest of your Tuesday. Thanks, Brian.
Back at you, Jesse. Thanks.
Brian Splitt with agmarket.net here on Market Talk today. That's going to do it for the show on this Tuesday, June 7th. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.